All right, what's in my stock market portfolio this week? So in my newly opened margin account, I bought some Vermilion Energy Inc., ticker symbol VET.TO, which is a Canadian-based company, which pays about 8% dividends per year, and it's at a 52-week low with a 5 billion market cap. It lost money in 2015, 2016, but 2017 started being profitable again. So I bought it at 32.5, but it closed on Friday at 31.62. So I'm down 2%, 2.5% on that. In my TFSA, I've got Ford that I bought at 10.95 a while back, closing at 9.38. I've got the options that I bought at $1, closing at 90 cents. So on the stock side, I'm down 14%, and on the option side, I'm down 10%. I've got Facebook that I bought a while back at 168, which closed at 145, so I'm down 13% on that. I'm pretty disappointed in myself for buying Facebook at 168 because when I bought it at 168, I remember I didn't have any cash. I got out of Starbucks earlier than I wanted to, just so that I can have enough liquidity to buy Facebook. I remember I had bought Starbucks at 51 and I wanted to sell it at around 57. Instead, I sold it at around 55 just so that I can buy Facebook, and now Starbucks is trading at 68. So very disappointed that I sold too early. It's not the first time that this happens to me, that I sell too early, but at least I'm happy that I'm buying at the right prices. But I'm definitely leaving money on the table. But at the same time, but something like Starbucks, like, it's going to go up, it's going to continuously go up. But I remember the same day I sold Bank of New York Mellon that I bought at 50. I sold it at 52 about. This was a stock I wanted to sell at 55, but I sold early just to buy Facebook. And apparently I bought Facebook a little bit too high. But that was a good decision because Bank of New York Mellon dropped to 45 after that. So sometimes it's a good decision, sometimes not. But definitely Starbucks hurt a lot when you see a stock that you bought at 51 trade at 68 afterwards. Anyway, so I've got AT&T that I bought at 32, closing at 30.69. So Ford and AT&T pay dividends. So while I'm waiting for the stocks to go back up, I'm collecting dividends. Facebook does not pay dividends. So on the RSP side, I've got Alibaba shares that I bought on 164. I'm looking to buy more Alibaba shares, but when it drops a bit more. Got Bank of Nova Scotia that I bought at 71.8, pays dividends. And if it ever drops at 66, I'll definitely buy more. I've got Dividend 15 Split Corp 2 that I bought at an average price of 4.5, closing at 4.18, so I'm down 7% on that. I've got Dividend 15 Split Corp that I bought at 8, closing at 8.46, so I'm up 6% on that. I've got some more Ford shares that I bought at 10, closing at 9.38, so I'm down 6% on that. I've got some Ford options that I bought at $1.50, closing at 90 cents, so I'm down 40%. That's just a bad number to look at. I've got some more Facebook that I bought at 145, closing at 145 as well, so I'm down 0.5% on that. Got GM that I bought at 34. It actually rallied to 37 this week. I was up 8%, but I wanted to sell at 37.5. Regardless, it's a safe stock. I think it'll easily reach 40 or more, and it pays 5% dividends per year, and it's a stock on Warren Buffett's list. So although I came close to selling it this week at a 10% profit, and it closed the week lower, I'm not that disappointed because I don't mind holding it longer. I'll be collecting dividends while holding the stock, and I'm pretty confident that it's going to reach 40 anytime soon. So if I Google GM dividend payout just to see when I'm expecting a dividend, so I need to have held the stock before December 7th in order to get a dividend payment on December 20th. So the previous dividend was September 7th, so I don't think I bought the stock in September. I think I bought it in October. So my next potential dividend payment is December 20th if I keep the stock until December 7th and after. I've got a Honda Motor Company that rallied also this week almost to 29.3, but closed the week at 28.5, so I'm down only 2% on that. I've got Vodafone that I bought at 22.87, closing the week at 18.79, so I'm down almost 18% on that stock, but it pays almost 9% dividends per year. Now, even though Zacks Equity Research came out with a strong sell for Vodafone, I definitely don't care. I'm still gonna buy some more Vodafone. I actually placed an order to buy more Vodafone today at 18.5, but it didn't go through. Here you can see buy 63 at 18.5, but it didn't reach 18.5 today. So we'll see what happens next week. But yeah, I really don't care about these random recommendations that come out and make the stock drop. I mean, GE dropped almost 10% today just because some analyst from, I think, JP Morgan Chase gave GE a $6 target price, and the reasons behind that are reasons that were already mentioned in the past. Just because he brought it up again and gave it a $6 target price, the stock drops 10%. So just really ridiculous reasons why stocks move. As long as the underlying business, the business model of the company makes sense, and I'm confident that it's not going to disappear or go bankrupt. I know that eventually it's going to go back up. So all these drops are just buying opportunities, in my opinion. So on the investor's edge side, I've got some AltaGas that I bought at 14.75. It actually reached 16.5 this week, but Friday it closed at 15.75. So still in a profitable position. So this stock pays pretty good dividends, and it's at a 52-week low. So that's the reason I bought it. Got some more Bank of Nova Scotia that I bought at 76, I believe, closing at 70.79 in this. I've got Barclays that I bought at 9. I believe it closed at 9.15 today. Yeah, 9.15. I've got Dollarama that I bought at 40.75, closing at 36.98. Although it went lower just because some other analyst gave it a bad outlook, and the stock reached, I believe, 35. It actually rallied back up to 37.5, but closing this week at 36.98. And I've got Enbridge that's rallying back. I bought an average price of 48 in this account, and it rallied back up to 43.49. But Enbridge I'm not worried about. It's definitely going to be a stock that's going to continuously go up, and I'm collecting 6% dividends per year on that stock. Got Cenovus Energy that I bought at 15 more than a year ago, closing at 11.82. Got Dividend 15 Split Corp 2 that I bought at 5.17 in this account, closing at 4.16. Got Enbridge that I bought at 46 average price in this account, closing at 43.49. So getting close to the price I bought it at. And I've got HBC that's absolutely killing me that I bought at 13.5 more than a year ago, closing at 8.61 today. Now this is the ugly side of my investments. I've got General Electric that I bought at 17, closing at 8.58. I'm definitely going to buy some more. I had an order at 8, but obviously didn't go through today. I think the lowest it reached today was 8.15, but definitely going to buy some more. Disappointed that it doesn't pay dividends though. Kraft Heinz, I bought also way too high. I bought it at 75, closing at 54. It actually reached 50 this week, but rallied back up and closed at 54. At least Kraft Heinz pays some dividends. Got New York Mortgage Trust that also rallied this week, reaching 6.4, but closing at 6.09 this week. This stock pays me 13% dividends per year. So it's a stock that I'm just going to keep forever, or until it goes to like $7 or $8, and I'll just sell for the capital gain. I've got Orange Telecom that I bought at 15.75, closing at 16.56 this week. So not bad, not bad. Also, this one pays me about 8% dividends per year. So that's what's in my stock market portfolio this week. If you have any questions, leave them in the comments below. Any stock tips, leave them in the comments below. I wanted to mention something about sharing stock tips. I've got some friends that don't like to share stock tips, thinking that they see it as a secret or an advantage or competitive advantage they might have over others. They don't like to share their stock tips. Now, first of all, I definitely don't agree with that opinion or that philosophy, because first of all, when others make profit, it doesn't necessarily take away profits from you. So if you bought a stock at a certain price and you're happy with it, if you share that stock tip with someone else, it's not going to ruin you. It's not going to hurt you. You're only going to help someone else. And so that's how I see it. And if you want to see how it would benefit you, if anything, by sharing your stock tip, you're just increasing the chance of more people buying it. So that's actually increasing volume on that stock. So if there's more people buying this stock than selling it, then your stock is going to go up. So if you've bought a stock and you share it with others, it's actually good for you because there's a better chance that it goes back up. But more importantly, you're just helping others make a profit and it doesn't hurt you. So I don't get why people don't like sharing stock tips, thinking that it's a secret. Definitely against that philosophy. So yeah, anyways, like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video so you can get between $25 and $250 back. Thanks for watching.